token narratives. What do you got, David?
All right, so I want to start the pre-show with this chatter I saw on X this week about number one, the effect that using LLMs has on your
On
has
your
on your
brain.
brain.
Oh, I saw
Yeah,
that.
you saw that?
Yeah.
Yeah,
I didn't look
and
into it,
honest,
but yeah,
I, I
go ahead.
I read posts about it. I looked at the some of the research, and as a older millennial, getting older in my years, that kind of fear mongering kind of works on me particularly well. I feel like, right, like the video games are gonna make you more violent kind of thing. But at the same time, I have to say, I do think that this is true, and I do a lot of writing,
Yeah.
and writing even now, I do a lot of writing. It's hard. It's like exercising, right? You go to the
Yeah.
gym, and the first 5 minutes,
Yeah.
you're like, oh, I don't want to do this, and
Yeah.
then you kind of your mind gets a little more limber and you start to do it.
Yeah.
But when you have an LLM there, you kind of bypass a lot of that, and you're
Yeah.
not actually thinking through a lot of things, or depending on how you use LLMs, you're not doing that.
Yeah.
So I think there's a lot of truth to it. I don't know what you think.
Yeah, no, I'm sure there is. And also I think it ties into some of these I kind of ironically AI produced videos where it's the ones that are talking about the post-apocalyptic human future where the AIs have taken over the humans and like yeah, like all the humans are dead. And the premise is basically that humans were just like too lazy to think for themselves, and so they just like outsourced everything to the computer, and yeah, like that's the vision, the dystopian vision of the future that we're headed to. But yeah, what are you gonna do?
Well, I think there are a couple things here. Number one is uh, AI to me, at least up to this point, is still just a tool. And so part of the
Yeah,
research showed that the graders, the people who were grading these papers from, I believe it's high schoolers or junior high schoolers, the graders could almost instantly tell the AI slop. Right? It was kind
mm,
of perfectly worded and grammatically correct, but
yeah,
vacuous. Right?
yeah,
And so they could easily tell which people were predominantly using the LLMs versus those that weren't. And so, for example, when I sit down and I do like a decent or serious piece of writing, I kind of converse with the LLM. I have
yeah,
my idea already. I have my idea already, and then I ask the LLM like, "Hey, is this actually right? Or is there? Can
yeah,
you can you like fact check me basically?"
yeah.
And then I'll
That's the
go
way to
through is
do it.
like, yeah, like, oh, this is how I think derivatives work, for example. Is this right?
Yeah,
And often it'll be, yeah, it's basically right, but you're missing a couple of
yeah,
nuance, that kind
exactly,
of thing.
exactly.
So I think the key for me is when I read this, of course, I was thinking about my kids. And I think they need to start using LLMs like very soon. But
Yeah,
it's going to be very important to direct them how to use it. Right. If you just
hmm,
give them a prompt, like write me a paper on why Shakespeare was secretly a closeted homosexual. Boom, it comes
yeah,
out. Like
yeah,
that makes the slop. That makes the slop.
yeah,
So
exactly. Yep.
okay, one more thing, one more point, one more point.
Yeah, go
So the
ahead.
other thing that was came out from this week was this is from Nate Silver,
Mm,
who famously left leaning guy, who was talking about how um, Republicans, for example, are a lot happier across a lot of metrics.
yeah, I
And then
saw
I
this
think
as well.
tied into this though was I think Nick Carter mentioned something about how it's also curious that by at least in the U.S. by political party, the acceptance or flat out rejection of AI and using it falls strictly by politics. And so
Hmm.
the right is overwhelmingly in support of it and using it, and the left is very much against it, and they're not using it at all, basically. So it's an interesting dynamic, I think.
Mm, that is interesting.
What do you make of that? Like conservatives, that has the word conservative. It's interesting that conservatives are the ones who are embracing this, and actually using it
Yeah. Yeah.
and presumably running these companies, I guess, or maybe not. I don't know. And then the liberals, they're kind of becoming very anti-technology, right? So it's kind of this
Mm.
inversion of what we normally
Yeah.
see.
Well, I think that follows just the inversion in general of politics. Like, I don't know about you. I mean, a lot of people who a decade ago identified themselves as like left have switched to right. So I think that this just mirrors that.
Yeah. But there we go. AI is in the middle of it. And so, you know what you could do if you were going to hire somebody, because I think it really is important that everyone in your organization is using AI. And as the Blockworks CEO said like a couple months ago, he has hammered away that his employees should use AI, hammered and hammered and hammered, and still only about 25% of them use AI on a regular basis, which is crazy for a small tech crypto focused company to have that low level of AI usage. Anyway, so you could you could probably just kind of ask. I guess you couldn't do this in an interview, but you could kind of find out if they're left or right leaning, and then that would serve as a proxy, a very accurate proxy of whether they're going to use AI or not, right? I mean, so
Interesting. All right.
yeah,
Let's get into it because we've got a lot of good topics here today. So, welcome back to Bitcoin.com's Token Narratives, where we discuss the biggest stories shaping the Bitcoin cryptoverse. My name is Graham Stone, and I'm repping the Bitcoin.com marketing function. I'm joined as usual by news and research gigabrain David Sensel. Welcome, sir. Bitcoin is trading at around 104, between 104 and 105K. How you feeling about that? What's your gut
yeah.
tell you?
I mean, considering what's been happening for the past 2 weeks, uh, remember just 2 weeks ago, the threat of nuclear annihilation ticked up a couple notches because of the whole um, drone strike from Ukraine within Russia, and then of course we had the Israel-Iran conflict kind of escalate as well. So, considering all the kind of macro risks, the fact that Bitcoin is still above 100K here, I think bodes well for Bitcoin, and obviously then there are all the tailwinds that are happening just in general that we've talked about on this podcast and other places too. So I I'm I'm still very very bullish, and I don't really see any. There might be some short term risks, but I don't see any medium term things that are worthy of note. Quite the opposite, actually. How about you?
Yeah. No, I'm bullish for sure. I'm kind of expecting a big jump here at any moment, but then at the same time, like looking at this prediction market here, when will Bitcoin hit 150K? And the the majority of people are saying by the end of the year. Only a small minority are saying before August, only 4% before August, 32% by the end of the year, 14% before October.
150K by August. That does sound less likely to me. Certainly by the end of the year, I would take those odds. I don't know about August.
Yeah.
But yeah, I think you could see a decent jump um, up from here, especially with all these what we're going to talk about later. All these treasury companies and um, what's it called?
Well, let's get into it.
Okay.
Let's get into it. So we have a crypto treasury explosion, obviously. Um, how do you want to approach this? Start with
Well,
the
I think we talked
yeah.
about this like a month ago. I wish I could find the clip where it was either you or me. We were saying, this is gonna starting with Bitcoin companies buying Bitcoin, but after this, and we saw this kind of get saturated, and there's still a lot more of those to come. But I think we said offhand, like this is gonna go further out on the what's it called, on the risk curve, and companies are going to start looking for more beta on this kind of playbook, right? And here we have it. We have this kind of start of the proliferation of companies, listed companies, mind you, too, uh, listed in the U.S., starting to take this playbook, except substituting Bitcoin with lesser coins, shit coins, if you will. So the first one we have here, this was a major story. Oh, which one do you want to do first? Oh, you want to do hype or do you want to do
Let's do
Tron?
hype.
Okay, hype.
Tron.
Yeah, I was just going to start with the biggest one, right? This is a big story in of itself, not necessarily about the treasury component, but just the fact that Justin Sun is going to be. It looks like he's going to be able to list a Tron vehicle in the U.S. Tron has a very checkered past with well, within crypto and especially within the U.S. Right. Um, Before Trump got elected, I think he was being pursued quite heavily by the SEC and maybe other U.S. authorities, and now that's all cleared up, and he's very very close to the Trumps. He's appeared at multiple dinners, I believe, with Donald Trump, um, and he is an integral part of World Financial Liberty. Is that what it's called? World
Yeah.
Liberty Financial. And now here's TRX really kind of getting a foothold into a regulated company, listed company. So this this is pretty big news just in of itself. But also buried within the details is the fact that Justin Sun is going to put $210 million worth of TRX, I guess, onto the balance sheet of this new publicly traded company. In effect, making this a Tron treasury company, right? So they're going to hold a lot of Tron, and perhaps if they can raise more money, maybe they'll buy more.
Look at the Tron chart. It's insane. Look at this.
Yeah, we talked about this like
As
what,
we've
6
talked
months
about
ago.
before, it's like the best looking chart in all of crypto. I can't
It
believe I
is,
don't
dude.
hold any Tron.
And dude, after this announcement, and also just the fact that, not to be too cynical, but Justin Sun is so closely tied with the current administration. Um, is there any chance that Tron's not going to perform well in this this next leg up? I don't know.
All right. Might have to get out
not,
the old Tron leverage positions.
not financial advice.
All right.
So
What else we got?
yeah,
Canadian Stock Exchange listed company Soul Strategies has filed with the U.S. Securities and Exchange Commission to trade on NASDAQ under the ticker symbol STKE. And the company has been accumulating SOL as a treasury asset and operating Solana validators with current holdings exceeding 420,000 SOL.
so again, here we go. Non-Bitcoin, put it on the balance sheet. Watch the stock price explode. Here we have a company called Inovia, which is a digital how do I say this? Oh God, I can't. This word is difficult for me.
Oh, this is Andrew Huberman's word, isn't it? He's
Is
like,
it
I'm pretty sure that's ophthalmology.
ophthalmic technology company? And they are buying $50 million worth of the hype token, right? And they're going to hold about a million hype on their balance sheet, and then they're going to stake that hype, and start getting hype staking rewards. I'm assuming all of these, by the way, are going to stake their assets, but we can get into that in a second.
What's going on here with the oh yeah, definitely got a spike on the
Yeah.
news. Oh, double.
And
A cheeky
and
double. A cheeky 2x.
yeah, and I think that'll only increase. Let's say hype goes up. Let's say hype goes up 100% from here, which I think is pretty reasonable. What's that going to do to the stock? I can only imagine,
Yeah.
right? And then another hype one. I think hype has a particular allure to TradFi because I've talked about it before, but most of the revenue, the real revenue from the Hyperliquid exchange goes directly to hype
Yeah.
token
One of the
holders.
few crypto tokens out there that makes sense from a price to earnings perspective.
Yeah,
If you're a
yeah, yeah,
value investor.
yeah.
So
Also,
ironically, the price of hype may not all be hype.
yeah. Also, talk about value investors. It basically gives a guaranteed dividend, right? If you stake it, right, which is another thing that um, TradFi loves is yield, especially guaranteed
Mm,
yield. And
mm,
so
mm.
you buy a butt ton of hype, the revenue goes directly to hype holders, which increases the token price, effectively like a buyback. Again, TradFi loves buybacks, and you get a dividend kind of because you get more hype by staking it. Anyway, so there's another one doing it too.
What's the staking rate? Do you know?
It depends
Sorry, not. I
on
mean the. Oh, okay. So there's lockup periods.
no,
What
no,
yield
no.
do you
So
get? No.
so the hype validators, they offer different rates to be
Oh, I
competitive.
see.
It's usually between 2 to 3% around there.
Oh, pittance.
A pittance. I mean, ETH is 3%, but uh,
Yeah, but
yeah, yeah,
not worth staking, in my opinion, for unless you're like holding hundreds of millions of dollars of hype.
yeah. I suppose so. Anyway, so you have these. These are three examples. There are others that I saw. I just couldn't recall when I was making this list. But you're really starting to see this ramp up, and I think the crazy time has not come yet because in general altcoins have not performed particularly well. I mean, they have to a certain extent, but not performed particularly well. But man, imagine a time, Graham, where Bitcoin runs. So let's say Bitcoin hits 150 by August, and then it cools off, and you see like a massive altcoin run. Those equity, those TradFi equity vehicles that are holding a lot of altcoins on their balance sheet, they're going to see like crazy returns. And that could kind of become a flywheel where TradFi people are like, holy moly, my TradFi stock doubled or tripled in a month. They're not used to that kind of craziness, really, right?
Yeah.
Um,
So that's what that's the thesis here, which this guy, Mr. Shift, is pointing out that basically Bitcoin treasury companies, but not just them, crypto treasury companies are basically the new crypto, the new crypto shitcoins. Like the new 10x's are here in the TradFi realm, not so much in the like the meme coin trenches and other places where yeah, like influencing peddlers are shilling.
yeah, I think this is an interesting post. He's been bull posting on this for like a week or more, um, and I think this narrative is going to be a big part of this next leg up or the rest of the cycle. I think I think this is one of the ways that retail or people who haven't really have either left crypto or haven't really joined in will get exposure is through
Yeah,
this kind of thing.
rather than buying tokens this cycle.
That yeah. Now here's I don't know. So first of all, what do you think about this idea?
Yeah, I mean, this is an interesting thesis. I guess one pushback on it is that it's not as open to global retail flows as the crypto token avenue, because you're kind of restricted to like TradFi, so the US primarily, and a few other like connected markets. People in Pakistan and India are going to have trouble buying into these things.
They also don't have much money, though. I mean, that's the other side. I
Yeah.
mean, just to be honest, was it? I think most is it a majority of crypto is bought by Americans in general. Just like
Mm,
not an absolute majority, but the biggest single nation that owns crypto or buys crypto is America. I think it's like 30%, 40%, something like that.
yeah.
Um,
So yeah, I mean, we're seeing all these TradFi stocks based like pop anytime they announce that they're holding crypto, right? Like this random ophthalmologist company, Inovia, went doubled overnight basically, and they announced it. Metaplanet's up like 15x in the year or something. So they're just like popping off left, right, and center, just like crypto coins of an bygone era, it would seem.
mm, yeah, and so I think this is only going to accelerate. I agree with Mr. Shift here, which is we're at the beginning of this. This is really just starting.
Yeah,
And I think it's going to get crazy. I think you're going to get like this is like the GameStop level craziness. I would imagine
yeah.
coming up is what
So
I
he
think.
says that the least risky way to play it is just buy Bitcoin, and then next would be MSTR, which is, as we've talked about, let's say the safest version of these, the most sober with the way that they're accumulating, like not as degen as some of the other players. And then yeah, a few like TradFi names like Circle, Coinbase, Galaxy. And then if you want to get further out on the risk curve, you open a brokerage account and start aping into any small company that announces a BTC treasury, or I guess other crypto treasury. Just ape into it. Like I don't know, set up notifications to be like to hear about any time these companies are going to do it. And then the third is the absolute Chad play. You just you do it yourself. You acquire a company and yeah, put crypto on the treasury.
Where are we in the
So
cycle, Graham? Where are we in the cycle?
yeah, uh, but the least risky way to play it, just hold BTC, because the majority of these companies are putting Bitcoin on their treasury sheet, and like that means they have to buy Bitcoin. So it's buy pressure on the dwindling supply of Bitcoin.
All right,
So
so this is the second question I wanted to ask you, and I guess there's two parts. There's the Bitcoin part, and then there's the all the other coins part, the shitcoin part. So that is the question, Graham. Is this going to have a very material effect on Bitcoin? All these companies buying this like this, because we've seen now for what, a month, 2 months, this really start to ramp up. The number of announcements we do on this show and the weekly, it just we can't even keep up now. And I do breaking news on BTCTN. Seriously, every day, no
yeah,
exaggeration. There are at least a dozen every day of
yeah.
new companies announcing it. I have a couple of accounts that all they do is talk about companies all over the world who are putting Bitcoin on their balance sheet. And you can just look at their feed. It's like a dozen every 24 hours. Price isn't moving.
Yeah. Exactly. What's going on there?
Yeah, what's going on there? I
They're
mean,
not
people
actually
are
buying
gobbling up.
Bitcoin.
Well, they are. They're gobbling it up, right?
Yeah.
So I think there are a couple of accounts that I follow. They're kind of more Bitcoin maxi accounts, and they talk about how these companies buying Bitcoin like this have much less of an effect on the price than if they went out and bought them in just if they just bought it directly.
because they're doing OTC deals.
Maybe it's OTC, or um, they're doing it in a very controlled, like, TWAP way. I'm not exactly sure
Mm,
the exact thing, but and I'm not saying that I agree with this. It's just something that I've heard.
yeah.
So I don't know how I feel about this, honestly.
Yeah, I mean, I don't understand it, but I have also heard like on that note that the amount of Bitcoin available on OTC desks is dwindling. And then of course we've heard several times like the amount of Bitcoin on exchanges is dwindling. And so yeah, it does seem like we're setting up for a like a crunch.
Yeah,
And the price of Bitcoin itself, right? Like it broke the most recent all-time high break was like a couple weeks ago. It's been consolidating. It's just had its longest streak now above 100K, like 40 consecutive days, I believe. And yeah, you could argue that we're just coiling up here, ready for the next big move.
yeah. No, I agree with that. Now, I think the second more interesting question is for the shit coins. So all these companies who are buying, like, I don't know, Tron or Solana, Hype, this to me seems a lot less likely to have an effect on the price of those assets, because all these treasury companies, they buy Bitcoin, and then you have retail and, crypto users, and they say, "Oh, Bitcoin, I'm going to buy the asset directly," right? Maybe you have companies who can self custody, right, and they'll just buy it directly, maybe, and so they can have like a marginal effect on that price. I don't think any people are gonna they're not gonna buy Tron or Solana or Hype directly, right? They might buy the company that's buying them, and then how much of that money, as in like the premium, how much of that money that the company now has from people buying their stock is going to result in them buying more Hype? I feel like there's a compression there in terms of trad people, let's say, put in $100 to that equity, and then that equity company, they raise 10 more dollars
Yeah.
to buy Hype. So you lose you lose a lot of
Yeah.
that thing. Whereas before they might just buy Hype, like in a different cycle. So I feel like for that there would be less of an effect. At least that's kind of my initial impression. I've just been thinking about this today mostly. I don't know what you think about that.
Mm. Yeah, I don't really have a strong opinion, but what you're saying there makes sense.
So
Yeah, of
it
course.
could be again. Oh, sorry, go
Yeah,
ahead.
I mean, on the other hand, of course, like the market cap of these shit coins is much smaller than Bitcoin, so less is needed to move the price.
Yeah. Yeah, I mean that, yeah, totally true. It also could be the fact that I mean, I just could see this narrative we've had for what? Has it been like 18 months? Bitcoin has gone up so much, right? From a base of like what, 18,000, 16,000 to where we are now. Alts have really really underperformed Bitcoin, right?
Yeah,
And I think it's because, and a lot of people think it's because, people are saying like this time is different. The institutions are buying Bitcoin and they don't have any appetite for this other crap. And so we haven't really seen alts. We haven't seen like that trickle down effect where crypto natives buy Bitcoin. They 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 realize those profits, and then it trickles down all throughout the alt complex. So I don't know. I don't know if we're I don't know if we're ever going to see that like massive, crazy alt coin run thing. I'm not sure.
yeah. No, it's really interesting theory here from Mr. Shift, who's basically, yeah, he's saying like, look, the it's happening in TradFi. That's where all the 10x, the 100xers are right now. So get your brokerage account set up, ladies and gentlemen. If you, I can't do it. I don't know how that works.
I was about to say, you and I both. I'm missing this massively right now. It's killing me.
Yeah. All right. Let's move on to the the stable coins narrative, and So, like, the Genius Act passed the Senate just a few days ago with a vote of 68 to 30. Now, it has not yet been passed in the House of Representatives, so not yet law. I'm hearing mixed reports about whether it will actually get through the House of Representatives. I don't know if you have any thoughts there, David, before we move on to something else here related to
Yeah, I mean,
stablecoins.
just on that point you just said, I think it's telling the fact that Trump and his his long truth post was saying, "Pass it now, no changes, no amendments, no additions." That kind of language, I think, kind of tells you that in the House there probably are a lot of uh, interested parties who want changes and amendments to the bill, right? And so I think that's maybe the point of contention here, is what needs to be changed, if anything, to get it passed, right? And I think that maybe that's where the potential problem is.
Yeah, I mean, something's going to get passed this year for sure. It could happen quite soon. People are
Yeah,
saying like, I mean, they're pushing for before August. I think is when the recess is. Now that this thing might get merged into a market structure bill. There's rumblings of that as well, which would probably delay things. But I think there's a lot of pressure to for this to actually happen from Tradfi players now, right? Obviously, we have uh, the Circle IPO, which like the most successful IPO in the recent history, and
500% up.
yeah,
It's up
exactly.
500%, and so $31 to 200, I believe. Man, why didn't I buy it, dude?
Yeah.
Again, it goes back
So
to Mr. Schiff's thing, right? Like
yeah,
that. These are where the big runners are right now.
so I wanted to talk for a few minutes about this interesting article I read from Rob Haddock titled "Stablecoins and the Collapse of the Legacy Payment Model." I just found this really interesting. So first of all, we have this chart here charting the growth of stablecoins versus Bitcoin, PayPal, remittances, Visa, and the ACH network, and it's like come out of nowhere basically to be a top contender in that realm. So that's interesting. But what I found really interesting about this article is, all right. So this guy is saying that he's claiming that stable coins will unlock the first $1 trillion fintech. And what I like, okay, his logic for this I found really interesting, and it's sort of it, it's kind of necessary to go into the history of how payments have evolved. So, and I just found this really interesting. Let me see if I can explain it real quick here. So, like, we started off with um, what could be described as a closed loop with trusted intermediaries, so a walled garden. And the first like credit card was in the 1950s, and that was Diners Club. So it's like a multi-purpose charge card where it started in California, where Diners Club sat directly between the merchants and the card holders. And the problem with that is that it couldn't scale. This system, this walled garden system, couldn't scale. So, like, Bank of America tried to launch its own mass market credit card in the 60s, Bank America card. And it chaos ensued basically. Each bank was trying to build its own walled garden. You ended up with like duplicative systems and a poor UX. Delinquency rates were like 20%.
It also
But
split the market, right? Like
split the
it just
market.
fractured the market all over. Which one are you going to carry? All this kind of stuff.
Exactly. So this led to the creation of a cooperative where with some shared infrastructure and governance. And basically what ended up happening was you had two networks, right? Visa and MasterCard. This was this allowed the system to scale, but it was still very centralized and trust heavy. Then with the rise of the internet, we started to see like some independent payment gateways and processors. So most like notably, you had Confinity and X.com, which merged to become PayPal, and that was in like the late '90s. And then you had companies like Wise and Venmo, and what they did, they created these alternative payment networks where they bypass the banks and the card networks to an extent, and they allow for some monetary sovereignty by the end consumer, but they still suffer from the technical limitations of the underlying existing infrastructure. So that they still have to pre-fund, take FX credit risk, and the result is like it's like, yeah, it's still not great. So like one anecdote from the article, which was really interesting. Um, let me see if I can find it here. Just a sec. We'll talk about that in a sec. So the author notes that one startup founder that came from a large corporation told him that it was not uncommon for J.P. Morgan to lose millions for weeks while transferring treasury funds from a U.S. parent company to a foreign subsidiary. On top of that, there is the FX risk associated involved across multiple counterparties, causing the average like cross-border transaction to cost 6.6%. So still kind of a mess. And if you just look here at this table, these are all of the layers that are involved in payment processing. So you have the issuer or the issuing bank, the card network, the merchant bank, the payment processor, the payment gateway, payment services provider, and the merchant. All of these players add to the complexity of it. Now, this leads to the sort of the stage we're moving into now, which you could describe as like open loop with full individual sovereignty via programmable money. So instead of going from the user to the issuing bank to like Visa to an acquiring bank to a merchant, and then finally to some reconciliation, what you have instead is a user wallet, the blockchain, and then the merchant wallet. So this is where the potential is, according to the author of this article, for the possibility of like a $1 trillion fintech. And Stripe is sort of put forward as the one with the highest potential, perhaps. So how this would work, right? Like Stripe actually sort of becomes the bank, right? They're issuing their own stable coin. Once this Genius Act passes, it's all approved. Then they can settle across the consumer, the card holder, and merchant accounts, right? They just acquired Privy, as we talked about, which enables them to utilize like a transparent and open source ledger for on the merchant side, and then without like setting up, like with really easy setup. So it just collapses the entire thing potentially into code. So you have like accounts, issuing networks, banks, all of that just becomes this modular system. So that's the I guess if the like the structure of how this could happen. I don't know if you have any thoughts or questions. That's my TED talk.
No, it was awesome. Well done. I mean, I read the article too. You sent it to me, and I also really liked the article. Um, I think I would just add like a couple details here and there. Like for example, it's 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 going to collapse a lot of the complexity but it's going to also introduce new kinds of complexity, and uh, it's going to put some complexity kind of tangential. Some of the complexity just gets kind of becomes tangential to the actual transaction. For example, Stripe issuing a stable coin, that's gonna be like a separate thing, and it's gonna have its own separate like complex little silo. But that's not gonna have anything to do with the actual transaction. It'll sit to the side, right? Because they'll have
Yeah.
to have like a custodian, and the custodian will have to have some kind of account with a bank, and then the bank will be holding the treasuries and some probably like Fed account, and but that's all separate. And then the actual transaction, like you said, it'll just be kind of go across like this, um,
Yeah.
and and that will become very uh, that will become a lot smoother and more seamless. However, it's going to have to introduce other kinds of complexity. They mentioned this in the article very briefly at the end, but I've talked about it before, which is for this to be a consumer facing thing, they're going to have to be like, there's going to have to become like a new custodian, I think, that sits between the Stripe and the customer and the merchant. And it's basically going to have to function like a chargeback,
Yeah.
right? Because you're just we can't have this thing where these stable coins settle instantly and irrevocably, right? People don't want that. They want to be able to be like, hey man, uh someone stole my identity kind of thing, and you gotta help
Yeah.
me out here. So I think they're
Yeah.
gonna I personally think they're gonna actually introduce some kind of delay. There'll be like a party in the middle that will kind of hold
Mm.
the crypto on purpose, and they'll take a couple basis points for that risk. uh, but it'll be like a spectrum of products.
It's
You and
kind
I
of
might not.
an insurance system.
Yeah, right. and
Yeah.
and I know personally, like for example, if I get one of these cards kind of thing, you can opt in. You'll probably opt into this. You're like, okay, this is going to cost you 10 basis points, right, for your transactions or whatever it is.
Yeah.
Some
Yeah.
people are like, no, no way, I don't want that. And others like me, I'll
Yeah.
be like, yeah, fine, I'll take that. I don't want to get screwed and have no recourse on my my coins going, like that kind of thing. So yeah. I mean, again, I think the key here is me being a wet blanket is it's going to be a better version of what we have, but it's not going to be like this ultra perfect, seamless 100% thing like we have now. Like, for example, you and I, Graham, if we go out and eat and you pay in fiat, I can send you crypto 1 to 1, and it's just perfectly, there's nobody in between us, right? There's
Yeah.
nothing there. Um, that feels dangerous though. Sometimes when I'm doing it with you,
Yeah.
I'm like, oh, good.
That no, certainly there are problems with that vision. Like perfect peer-to-peer transactions between people. There's a lot of ways that that can go wrong. So I agree with your sentiment that there's going to end up being something in the middle, some sort of like insurance where you do have some recourse. If you're dealing with a third party merchant, you're buying something, you need to be able to like charge back.
Yeah. And you can imagine, like, I mean, like, think about, there'll be different levels of chargeback too. Like, let's say you're buying a house. I can imagine this. Honestly, I can imagine a future you're paying stable coins, right? You put a down payment in stable coins. It's like, I don't know, $200,000. Um, Man, you really want to make sure that that goes to the right place, and all these kinds of things. So you'll have like a proliferation of it, just like you do in finance. It's not going to be this ultra super
It's
collapse
not going
thing
to be,
that,
yeah,
yeah,
omni chain, omni thing. Like there'll be, yeah, different levels of it for different values, amounts. But I do think the sort of the direction of travel is clear, and it's pointing towards a disintermediation of this system of many intermediaries that has dominated since like the 50s and is like quite frankly just like in dire need of disruption.
yeah. So there are a couple things I think I agree with that. Just, I think, interesting points or things to think about around this. So I can just talk about a couple of them. First is, uh, I think it was I saw this online a while ago about this whole process, which is this really hurts the banks. The party that this hurts the most are the banks. Their fundamental business model is that they get deposits and they take those deposits and then they create loans, right? That's how they make money. That's their number one business. And this thing, stablecoin thing, is a very, very different beast. Um, you can get yield, right? You take in money and you create a stable coin, which has to be backed 1 to 1. And then you can put that into treasuries or something. So you get some yield on it, but you're not, it's a much lower money producing business, right? There's less risk, but it also produces less money. And so it's really kind of a fundamentally different thing than banks are supposed to do. And so the question is, I saw that I heard this asked on a podcast, but also I've just heard it. How much are banks going to get into this exactly, and how much is it going to hurt them in the long run, right? Like, so for example, let's say I'm a person, I want to deposit my money into a bank and maybe get some stable coins back or something like that. um, you could either do a normal deposit, which would just be that thing we just talked about, or you could maybe do a stable coin deposit where you just get your stables kind of back, right? I feel like that would fundamentally hurt the business model of a bank. And over the long run, this squeezes the banks out of what they're supposed to be doing.
Mm, yeah. I mean, a few banks who are the ones custodying the assets and that like presumably could do quite well.
Yeah. I mean, I think so. But then how can they do the other things? Like the liquidity they get from deposits to
Mm,
create loans kind of it kind of competes with that, right?
yeah.
Because as a customer, again, I'm a customer. I want to have my money available to pay for things. I don't really care how it's held. Well, I mean, I do, but I don't really care exactly how it's held. I just want to have a ready access to it, right? And I feel like stable coins is a much cleaner, better way, at least to some degree. Maybe not all of your money, but a lot of it. Um, I know personally, I would rather just put stable coins like kind of tied to my bank account as stable coins and not as like fiat money in a
Yeah.
bank, you know.
Yeah.
So anyway, that's one point. And uh, the fact that the banks really want to get on this business, I think, is true. But I think they also should be worried that they're going to lose a lot of their bread and butter, and
So
maybe
classic
become,
innovator's dilemma.
yeah, and they'll get like kind of they'll get kind of squeezed out of their main role for the past, I don't know, thousands of years, right?
Yeah.
Um,
So the rise of the first $1 trillion fintech is likely to come at the expense of the TradFi banks.
yeah, I mean, even if the banks do it, the question to me is which would be more profitable for them to do. Uh, is it more profitable for them to have the stablecoin business, or is it more profitable for them to have deposits that they can then create loans off of?
Yeah.
I
So
think,
maybe at the end of the day, the real winner here is just going to end up being the consumer. So
yeah,
banks margins, banks profitability maybe is going to dwindle because there's just like less opportunity for them. There's going
yeah,
to be a few big fintech winners who figure out how to like scale this globally and you know making it 1/4 of a tenth of a basis point on every transaction at a global level. They will be raking in cash, but overall, the amount of profits skimmed off by the intermediaries, I guess you'd like banks and all the infrastructure around them is going to be decreased. And that's going to be good for consumers. Like that's the hope, I guess.
yeah. Well, then if you take that and you look further down the line, let's say this reduces the bank's influence. There's also a negative side to this, though. Banks give loans to businesses, right? They're part of the economy, right? That you have these
Yeah.
people who work in banks, and their whole job is to take that deposit and then turn it into, um, what's it called? Efficient capital, right?
Yeah.
GDP, right? So they're presumably supposed to loan to solid investments that then
Mm,
multiply the effect of the money and make it better. So then
yeah.
you could see some downside to this too, which is less new businesses have an opportunity to get the money that they so desperately need to
Well,
increase
yeah. I mean, in
GDP.
theory, that system could be replaced by something else.
It could be, but you need the whole point though is that it can't be like what Aave does or anything like this, where you have
It's over
collateral.
collateralized. Yeah.
Yeah, it's because you're these
You
like
need
really
the
smart financial
reputation
people
based trust.
and
Yeah.
really smart financial people who have their whole careers. They can sit down with like a founder and they can kind of
Look
look
at
them
the
over and
risk. Yeah,
yeah,
exactly.
yeah, yeah, and
I
then
think there must be a way to replicate that without it having to be like, yeah, driven by some new form of bank, really.
yeah, or some new form of like loaning. I guess it'd be more like stripped down. I'm not sure. Okay, so
Yeah.
that's that's one thing. The other thing is, uh, so what was I gonna say? Oh, I forgot. Darn it! I had two more points.
You
Oh
forgot them
man,
both.
I forgot them both, dude. I got carried away with the first one.
That's pretty good. We can
Oh,
leave it there, I think.
awesome.
Um, yeah. So, any last thoughts for this week's Token Narratives episode?
Oh yeah. Which camp are you in, Graham? The nothing ever happens or something's happening now camp?
Oh, you are you speaking of like geopolitical events or
Yeah,
something?
yeah.
Uh, nothing ever happens. Yeah, but I mean, it's easy for me to say because I live in Japan, where nothing does ever happen.
You almost technically don't live in Japan. I'm not going to give out the secret, but yeah, you're definitely near a place where something indeed is likely to happen,
Yeah.
or the chances of something happening are higher than like let's say Ohio. That would be my take on
Yeah, might have to move back to Saskatchewan.
it.
That'll never happen. All right. Let's wrap it up. So, yeah, thank you, David. As always, very insightful from you. And thanks to anyone who listened to our latest episode of Token Narratives. We'll catch you next week. Adios.